Okay, so time frame is very important in trading. So the charts will display different informations based on the time frame that you use. Okay, and typically what happens is as you zoom in, right, as you get more granular in the time frame, you start to see a lot more noise and a lot more volatility, and there's reasons for that. We'll talk about that a little bit later. Whereas if you were to zoom out and look at longer and longer time frames, the patterns and the things that you see in the chart become a lot more reliable. Now, again, the most common charts that traders use are candlestick charts. Anybody want to guess why that is? You guys remember what is unique about candlestick charts?
It's more accurate.
It's more what?
It's more accurate, like it shows more open and close.
Right, exactly. It shows more information. So if you remember when we looked at line charts, basically you're just looking at one point connected to a consecutive point, and a line is drawn in between. With candlestick charts, each candle represents a summary of the market action that happened in that time frame. Okay, so if we're looking at 5-minute charts, you see a summary of the open, the close, the high, and the low, all those 4 different points in one graphic, right? Whereas with other forms, you don't get that. Okay, so the time frame you choose in your chart will impact your perception and trading decision. This is a good point because oftentimes people ask me, okay, well, what do you use when you trade? And the answer to that is that it depends. Okay, if I'm trying to, and I believe, in general, you want to choose 3, right? You want to choose a long-term period to get a sense of the overall market direction. You want to choose a midterm, time frame to get a sense of what's going to happen that day. And then you want to get a short-term time frame to help you actually understand when to get into a position. Now, the exact time frame that I use 1 day or 4 hours for the longer one. I use 30 minutes for the intermediate, and I use 5 minutes for the short term. But again, this just kind of goes back to you getting some experience and getting your feet wet in it, and finding out what works for you. So rule of thumb for day trading, we want to focus on using small time frames for the order execution. Okay, so at the end of the day, you're going to be taking a position, and that it needs to be done with very pinpoint accuracy. Okay, so you don't want to be using a longer term chart for that. You want to be using more of a shorter term chart for that. The exception being, if you're looking at it from more an investment perspective, again, that means you're going to be holding, or you intend to hold that trade for a longer time frame. Then you would consider using a longer term, time period for your charts to enter that trade. Whereas, if you're when you're day trading and you expect to be in and out of the markets, you want a shorter term